Hello and welcome. You're watching First Take here on News9, where we break down the day's action on Dalal Street. I'm Suyash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And so Wednesday morning in the markets, they are back in the green. Nifty has opened above the 22,700 mark. Sensex is also holding just below the 75,000 level, a level which, by the way, it had scaled for the very first time yesterday. And I mean, what a historic feat it was. I remember 10 years ago when BJP first came to power, Sensex was at just 25,000. We are triple that figure now a decade later. I mean, that's a CAGR of almost 12%. Which other market has given that kind of returns? The answer is simple: none. And what's more, the going from here on has been only getting better. I mean, for instance, it took the index just 81 sessions for the latest 5,000 point rally, which, by the way, is the fourth fastest in the history of Sensex. But we will talk about this in much greater detail in just a short while from now. Let's first take stock of what we got in terms of a handover from the global markets. Amit, over to you.
It's cautious, Suyash. It's ahead of the key inflation data that is going to finally provide the final cues on what the Fed rate cuts schedule is going to look like. Dow Jones closed slightly in the negative at 0.02%. S&P 500 was slightly in the positive at 0.14%. Nasdaq Composite was slightly in the positive at 0.32%. The European markets were in the red. The Stock 600 closed at minus 6.1%. Equity markets in Asia rose on the back of technology stocks. So Hang Seng this morning is up 1.77%. Nikkei, although, is in the negative at 0.27%.
All right, and I mean, it's a mixed bag, but overall, the cues aren't looking as bad as they were at the start of the week. I mean, the bond yields, they have fallen about 10 basis points from the recent high of 4.45%. It's now hovering around that 4.35% mark. The dollar index is flat on a day-on-day basis, but it's closer to 104 now than it is to 105 levels we were at just a week ago. Also, crude prices, they have softened slightly. Brent crude is back below $90 a barrel as of this Thursday morning. It's hovering somewhere around that $89.5 a barrel mark. But coming back home, it looks like the market is sort of repositioning itself ahead of what will be an eventful 2-3 trading sessions. Remember, today is the weekly expiry of Nifty and Bank Nifty, since tomorrow the markets are shut on account of Eid. But also later tonight we have the US CPI data that will come out. Then on Friday, Bharti Hexacom makes its debut on the bourses. And I mean, that's not all. Post market hours, we have TCS earning, India CPI numbers will come out. Also the IIP numbers will come out. So lots and lots to track over the next few trading sessions. I mean, it is going to be a choppy, right? And at a time when we are expecting heightened volatility, it's very important to mind our P's and Q's. And for that, we have a technical expert joining us on the show, Mr. Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Thank you for joining us here on News9, Akshay. I mean, overall, the markets, they are back in the green this morning. Nothing substantial in terms of, the percentage point gain. Nifty is up about 0.3% as we speak. But yesterday, a very interesting session. I mean, it was pretty much a session of two halves. In the first half, the bulls were in complete control. They were taking the markets higher. But, post noon, bears took over. We paired all gains and then some. I mean, what's your sense of things over here, sir? Just good old profit taking, considering that we have the weekly expiry for Nifty and Bank Nifty, or is the market finally taking cognizance of the global headwinds coming our way?
Good morning, Suresh. Well, my sense is that, there have been some slight turbulence in the indices on a day trading front. But if you look at the volume action, the volumes in the last couple of days have been slightly on the lower end. Now, this may be on account of the truncated holiday week we are into. That may be one of the reasons. And broadly, if the chart setup has to be seen, I see no area of concern as yet, because clearly the market has been shrugging off the global concerns, which we had had since last couple of weeks, with crude and your dollar index, your 10-year yields all going up, but the market is kind of still holding on to its ground. New territories have been conquered, and the setup is clearly pointing for the Nifty aiming for the magical 23,000 mark. 22,500 base has been set. That's your strong support now, and 22,800 might be a stopover resistance, but the broader target working out for Nifty is 23,000. So be set for those targets. Continue to be on the buy side till at least 22,500 holds. I do not see any concern for any correction unfolding or profit booking in the market as yet.
All right, and what's your take on Bank Nifty? Because for the longest of time on the show, we have been speaking about, when Bank Nifty will take the leadership role. It seems like it has assumed that role finally. We are at record highs on Bank Nifty as well. But, facing some bit of resistance around that 49,000 zone. Yesterday also we corrected about 230 points from those levels, from the day's high. In fact, the day's high was very close to 49,000, and even this morning we are trading about with about 100 points below that mark. Do you think that will be a key resistance before we finally make that move to 50,000?
Today, considering the weekly expiry, if we were to see how the option writers are placed, it's the 49,000 call writers who have been pretty adamant and written the strike of 49,000 since a pretty long time. I believe the way the momentum has been, it's been a bit of a scare for them, but the broader open interest positioning still is suggestive that majority of the writing bets are still holding on the weekly expiry day. So it's just a matter of time today. If 49,000 is taken out of during the day, then really these call writers will be in for a scare, and you may have a short covering move which can propel the rally further up in Bank Nifty. So I see more momentum in the bank index at record high. Still, there is more room for upside. The magical 50,000 figure, which we all look forward to in Bank Nifty, might be very soon in the offing for the April series itself. Clearly, 48,500 is the support zone which is setting up for bank index. As for a weekly trader today, you need to be concerned as a call writer or as a short bet if 49,000 is taken off. Till then, expect a lukewarm trades in the bank index. If 49,000 takes off, then momentum is expected to kick off. Broadly, the target area is 50,000. Support is 48,500.
Good morning, Akshay. Now, metal stocks were the ones that were rallying yesterday on the expectation that global manufacturing is going to be on a rebound in the immediate term. But the one stock that stood out was Hindustan Zinc, rose almost 18% on the Bombay Stock Exchange in one single day. All-time high, 52-week high of 407 on the Bombay Stock Exchange, a 13-year high on NSE. But if you look at what the gains that Hindustan Zinc has made over 1 year, it's only around 25%. It is on 411 today, so broken yesterday's record also. How do you see Hindustan Zinc going from here in the metal pack?
Yeah, good morning, Amit. Absolutely a fabulous rally for Hindustan Zinc. I mean, if you just see the kind of momentum and the returns in such a short duration, right from 300 to 408 in just a matter of 5 to 6 trading sessions, is a bit difficult to digest. But yes, returns are awesome. But as a fresh entrant in this counter, really, it gives me no comfort at such overheated technical parameters. A slight cool off maybe on profit booking would make it more, a good buy from a risk reward payoff. So ideally, a dip till 390 is what I would look forward to if I want to take a fresh buy entry in this stock. If you are holding to this stock, then great. Yes, you have had a fabulous round of rally, and this rally is projected furthermore till possibly 430 to 450 from a positional front with the 1 to 1.5 month perspective. So yes, for positional traders, if you're owning the stock, keep targets of 430 to 440. As a new buyer, wait for slight dips for a slight cool off. 390 would be a good rate to enter back on the buy side. The support area is 375. Your stop should be below those supports, and aim for broader targets till 430 to 450 in Hindustan Zinc.
All right, and another stock we wanted to pick your brains on is Paytm. I mean, there has been a lot of news flows around Paytm in the last couple of days. Last night, Paytm Payments Bank Managing Director and Chief Executive Officer Surendra Chawla resigned from the company, citing personal reasons and to pursue, I quote, better career prospects, unquote. Also, data released from the NPCI, Akshay, shows that Paytm has been losing market share on UPI over the last couple of months, but at the same time, institutional money is flowing into the stock. Mutual fund houses have actually increased their stake in Q4, and some marquee foreign portfolio investors, including New York-based Tiger Pacific, Societe Generale, and they have made fresh entries into the stock. What is going on over here, Akshay, do you think? Because the stock, it's been pretty much range bound. What do you think? It's just because the stock is cheap, that's why we are seeing some institutional participation, and how is it looking overall on the price chart, sir?
On the price charts, this stock has taken some strong hammering right from the levels of 900 or 2000 odd levels, and been somewhere in always on the news front, more on the negative news flow. And technically still, although the last few trading sessions has provided to be a respite for the counter, some good volume action, as you named, some buying activity to picking up at the levels of 380, 400 odd zones. But technically still there is no comfort which I draw looking at the charts if I were to take a bet from a long-term perspective. At least the first hurdle of 440, this is the number you need to have on your mind. 440 should break if any kind of stability or kind of a rebound scenario has to play out for Paytm. At the level of 397 where it currently trades, still the setup is negative. You might have the stock revisiting 300, 320 on the lower end. That's the recent low which we saw. So still I would say wait and watch. Do not take a buy trade as yet. There is still time for stability in this counter. It is strongly news driven. Let stability get by. Let 440 cross. Then we will revisit and take a buy call on Paytm. So as of now, it's an avoid from the technical perspective.
Avoid and wait and watch. Lows can come. But what are your picks?
For investors, one is Bajaj Finance. If you look at the broader chart setup, this NBFC has been making news in terms of its strong price recovery in the last few trading sessions. At the levels where it currently trades of around 7,200, the chart setup is signaling for targets of 7,400 plus with a stop of 7,124. So have Bajaj Finance on your buy list. And the second trade is in Lupin, which is from the pharma space and has a good chart structure, which is signaling signs of a possible bottom out. You have a gap up today on a positive news development, and the chart is suggesting targets of 1641 to 1657 with a stop loss of 1582. So Lupin and Bajaj Finance, my two top pick for the viewers from a short-term trading perspective.
All right, Bajaj Finance and Lupin on the radar of Akshay Bhagwat. Sir, great insights from you as always. Thank you for giving us time here on News9. But with that, let's slip into a short break. On the other side, Amardev Singh, Senior Vice President of Research at Angel One, joins us.
"40 countries, 1,000 multilingual bookstalls, 1.25 lakh people, one destination, the New Delhi World Book Fair 2024.
So it's a great honour to be here. Thank you to the National Book Trust and those that have embraced us over recent days.
I was at the London Book Fair once and I had not participated here, but this fair is an ocean and it's beautiful.
This should be your annual spring picnic.
Through the power of knowledge, we are going to create responsible citizens, global citizens with global skills and also global responsibility.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks.
Now what next? The next is the SUV. The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
A defiant performance by Tan Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Welcome back. You're watching First Stick here on News9, and let's first look at how the markets are doing, because we have slipped from the day's high. Nifty as we speak is back below the 22,700 mark, although the cut has not been severe, but today is the weekly expiry for Nifty and Bank Nifty, so expect some bit of volatility. Also, as I mentioned earlier in the show, it's going to be eventful 2-3 sessions. We have a bunch of data releases over the next couple of days. US CPI comes out tonight, and tomorrow the markets are shut on account of Eid, but when we come back on Friday during the market hours, we'll have Bharti Hexacom that will make a debut on the Bourses, and post market hours TCS will come out with its Q4 results, essentially kicking off the earnings season for India Inc. And then we also have the CPI numbers for India for the month of March. Also the IIP data will also come out, so lots and lots to track. So expect a choppy ride on the way up, but so far it looks like the going has been good. Buy on dips has been the strategy that has worked out for the markets fairly well, but again, since we are entering into that phase of uncertainty, especially with elections season just around the corner, the ride is again going to be volatile. So to get cues on that, let's also bring on board Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Sir, I mean, the markets once again, they are at a record high, and yesterday particularly was a historic day for our markets. Sensex for the first time claimed 75,000 mark. Back when Modi government first came to power, we were at about 25,000. We are triple that figure now. That's a CAGR of 11.61%. I mean, what other market has performed this well, Amar? And also the big question, when will we get to that 1 lakh figure? Can we get there in the next 5 years, sir?
I would say that markets have really performed exceedingly well, and also what we see is that global macros, global market sentiments have also definitely aided to that. So it's been both the domestic growth as well as the global growth. So a double engine, which you can say, that has really helped our Indian markets outperform, and many of the sectors have really performed. And also what we're seeing is that recently we've seen sectors like metals performing exceedingly well. We've seen some of the banking space, PSU banking space performing exceedingly well. We've seen the defense space perform exceedingly well. However, we didn't see much of the performance coming from the FMCG space. But overall, if you look at the broad-based rally has been there. If you look at the stocks which are trading off the 200-day moving average, that's close to almost 65-70%. So that tells that the broad structure of the market is very strong. And also the global sentiments, definitely we can't deny the fact that global sentiments, US markets, European, Japanese markets, they've all really helped. Apart from the Chinese markets, which had their own economic woes, where we are seeing some sort of, I would say, consolidation happening. So overall, if you ask me for the next 5 years, I would say Indian markets or India is definitely the place to be. But you have to understand that when you are into the markets from a long-term perspective, it's more like playing a 5-day match. That is a test match. You're not playing a T20 game. It's like you are running a marathon. You're not running a 100 meters race. So that perspective, investors and everyone needs to have, if you're looking at the market from a long-term perspective, because that's the way you can really create wealth. You identify stocks, or you even look at passive funds like ETFs, and you can invest on a SIP mode, wherein you get definitely far better returns as compared to FDs and other sort of fixed income instruments. And you beat the inflation also hands down. So the growth definitely is going to be there. Yeah, but we need to remember that it's never a straight line that goes up. You'll see corrections. It's like the snakes and ladders game, which we all used to play as kids, and even sometimes we play now as well. So the markets are also that way. So there will be corrections. There will be some unexpected event where the market tanks. But that's again the opportunity to buy. So whenever there is some major correction in the market, bloodbath is a very strong term, so I wouldn't want to use that. But whenever there is a major correction in the market, or some decent correction also, you should look at adding and holding from a long-term perspective. Definitely emerging a winner. The possibility, there's nothing called certainty, but the probability would be very high if you stay invested in India over the next 5 to 10 years.
Good morning, Amar. Positive growth expectations from global markets is always good for Indian exports. Now, the Sensex itself, it took just 82 days in the most recent 5,000 point rally from 70,000 to 75,000. However, out of the top 30, 10 stocks, which are mostly in the FMCG and banking space, gave negative returns. Do you think this is the time to get into these stocks and for investors to reap maximum returns in the near and medium term?
See, if you look at these FMCG stocks, FMCG, I was just looking at them over the weekend very closely as to on the fundamental side as well as from a long-term perspective on the charts. So honestly, if you ask me, they really don't inspire much confidence. So it's more of a range play in most of the FMCG stocks. It's not that we are going to see some trend change immediately happening. So rather, I would suggest that we should stick to names which are strong and are technically on the long-term charts, which have a very positive momentum. But yes, if these stocks are to rally, then only we will see the index also rallying. So some sort of rally would happen, but we'll have to see whether FMCG really the structure changes for them on the fundamental side, because there the pickup or the demand has to really take off.
All right, and Amar, speaking of FMCG companies and at large, weather forecasting agency SkyMed Weather has also predicted a normal monsoon for India in 2024. I mean, that's not just a big positive for agri-related stocks or FMCG stocks at large, but India's growth story also, no? Because I mean, it has been the rural consumption that has been a big pain point for the markets, isn't it?
Yeah, see, that is a big, honestly, if you ask me, that's a very big question. And because ultimately the spread of or the distribution of wealth plays a very important role in the overall economy. So how that is really shaping up going forward, that's an area, because in some areas we see a lot of wealth getting created. In some areas, there's still some concerns there in terms of the distribution of the wealth. That again is a concern area. So because we still need to understand that rural contributes significant in terms of the population stay which is there. So those aspects, and FMCG is spread out there as well. So I think that's one of the key things which are actually playing out. So we'll have to watch out how this really transforms over the next 3 to 5 years. But if you ask me, FMCG currently, I wouldn't recommend the stocks in FMCG from a buying perspective. Yes, they haven't rallied, so the downside is definitely limited. So from that perspective, you can say that they are defensive in nature. If the markets do correct, they wouldn't correct that much. that is there. But overall, the trend is definitely missing in most of the FMCG stocks.
All right, and Amar, while we all have been focusing on what's going on at the two ends of the spectrum, the headliners, Sensex and Nifty, and the small and the mid caps, Nifty Next 50, which consists of the 50 companies that are next in line to be included in Nifty 50 index, that has been the best performing index of 2024. In fact, Nifty Next 50 just notched its best quarter since 2009 versus the larger Nifty 50 index. I mean, are these stocks to consider buying, Amar? Because they offer the best of both worlds, stability of larger companies and growth potential of mid and small size firms, sir.
Yeah, that's you've really put it very well, I would say. So if you look at Nifty Next 50, as you rightly said, the stock, this index has delivered phenomenal returns. And if you look at the yearly returns so far, that's almost approaching almost 20%. And if we look at Nifty, that's roughly around, I'm talking about this calendar year, that's around 4.5%. So that tells me that having a basket of such indices to invest in terms of ETFs, that's the way forward, because you have to understand that these are the stocks. Some of the stocks from the Nifty Next 50 would move into the Nifty, and some of the stocks in the Nifty 50 would actually move out. So that churning will definitely be there. But this, as a group, what you get is you get the top 100 stocks of India. So if India is to really grow the way we expect it to grow over the next 5 to 10 years, then the top 100 stocks have to perform. You have to understand one thing, is that when you're looking at such large stocks, don't expect a multi-bagger sort of returns. For that, you've got your own picks in terms of small caps or mid caps, where the returns are significantly higher, but the risk is also high. Here it's more of you are definitely getting very good returns. Any return in excess of 14-16% annualized, if you can get from a long-term perspective, that's fabulous returns. Most of the mutual funds also don't really generate these sort of returns. So looking at passive funds, ETFs, and looking at Nifty Next 50, definitely the way to go. You rightly put it.
Amar, mostly we look at spaces like banking and FMCG or even commodities as market drivers. Do you think, with the expectations of a global manufacturing rebound, metals are the one that could lead the rally from here on, at least in the immediate term? Now look at yesterday, Hindustan Zinc jumped almost 18% on the BSE. In the last 5 days, almost 21%. Hindustan Copper has given returns of 254% in the last 1 year, jumped to 12.4%. Manganese ore, Steel Authority of India, all surged above 5% yesterday. Tata Steel, Hindalco, Vedanta were in the 1 to 3% surge. So do you think this can be the market driver, this space can be the market driver in the immediate term, with the expectation of a manufacturing rebound globally?
See, I would say that one thing we definitely need to acknowledge is that the metals market moves as per China to a certain extent, to a very great extent, not a certain extent, to a very great extent even today. So that is not likely to change in the near future. So we'll have to understand and live with that, because it's a Chinese demand for the base metals and the metals which has really led to this rally which we are seeing right now. And so having said that, India becoming a manufacturing base and growing significantly, still we are, in terms of, if you look at comparison with China, in many of the metal space, we are 1/10th, 1/20th, 1/30th of their capacity. So that tells me that we are still not price setters, we are price followers. Like in bullion, we are one of the major consumers in gold, but still we are price followers. So the same I would say with metals, but yes, over a period of time, maybe the next 3 to 5 years, 7 years, things could change, wherein we could become more of price setters rather than price followers.
On metal stocks at large, and even this morning, I mean, the Nifty metal pack on the whole is trading up almost 1.75%. And as Amit and Amar sir over here pointed out, they have been the flavor of the market in the short term, but long term, again, a lot depends on global cues, China being the biggest, because it is, again, remember, the biggest consumer of metal. So what happens there definitely affects the commodities and metals at large. But sir, Thank you for giving us time here on News9. Always great insights from you.
Thank you for having me on the show.
But before we wrap things up, let's talk about the levels where the markets are at currently. Nifty has reclaimed 22,700 as we speak. It's just hovering above it, touch above it. It's up 0.25% as of 10:10 a.m. this morning. Sensex is also, making, it was inching towards that 75,000 level, which it had claimed for the very first time yesterday, but we are about 130 points below that. So a bit of resistance at 75,000 for Sensex, but that's a nice round number. And time and again we have seen that a nice round number like 75 emerges as a key psychological resistance level for index. But remember, the ride overall is going to be choppy. Today is the weekly expiry for Nifty and Nifty bank contracts. Nifty because tomorrow the markets are shut and we have bunch of queues lined up. So whether you are trading or on the long side or the short side, just be cautious because the markets can move very swiftly. And and the levels, because we are in uncharted territory, the levels are hard to track. So just trying, putting it out there, and markets will be extremely volatile for the next 2-3 sessions. We are also entering the earnings season, and TCS will come out with its numbers this Friday, and then next Friday we have Infosys, Wipro that will come out with their numbers, and then the week following that HCL Tech. So IT companies first, and then as the season goes by, banks and FMCG will also start reporting their numbers. So market will have a lot to focus on in the next couple of weeks. And let's not forget the big one, the general elections. Of course that's going to be a big cue for our markets to track as well. But on that note, let's end the show. We'll see you at 4 p.m. on Last Tick to take stock of what the market has done for the day and how it was in this weekly expiry. But up next is World Business Report.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.